Okay, have you ever looked at the stock market at the end of the day and just thought, what on earth just happened? We just had one of those days. A day that was completely split down the middle. We're talking record-breaking highs on one side and a pretty nasty crash on the other. It makes no sense, right? Well, let's dive in and figure this thing out.
I mean, this is the big question. It's the kind of thing that makes you want to check if your trading app is bugged. How in the world can the market be popping champagne for a new all-time high, while at the exact same time alarm bells are ringing over a huge drop? The answer is pretty wild. It's a story about two totally different markets and one single stock that just blew everything up.
And this chart, this just says it all. It's like looking at a split screen. Over here, you've got the S&P 500, the big one, the broad market, not just up, but closing at a brand new record. Awesome. But then you look over here at the Dow Jones, one of the oldest indexes everyone watches, and it's down almost a full percent. These two things just don't go together. So what is the missing piece of the puzzle? This number right here. This is the key that unlocks the whole mystery. A massive 20% drop. So you're probably thinking, what is this? Some tiny speculative tech stock that went bust? A company nobody's ever heard of? Nope. The real answer is way more surprising. That 20% crater didn't belong to some small fry company. This was UnitedHealth, a giant, a titan of the healthcare world, and a huge piece of the Dow Jones Industrial Average. One single company had such a bad day that it sent shockwaves through an entire index. All right, so let's dig into part one of this story. Exactly how did this one mega company manage to drag the entire Dow down with it, even while the rest of the market was having a party? So what happened? Well, the whole thing was triggered by a government announcement. Basically, the folks who run Medicare told private insurance companies what their payment rates would be for 2027. And the number was way, way lower than anybody was expecting. This wasn't just a little oopsie. It sent a wave of fear through the whole industry about their long-term profits. And for UnitedHealth, it led them to project their first drop in yearly revenue in almost 40 years. Investors didn't just walk away, they ran. And this right here is the aha moment. This explains why it mattered so much. See, the Dow and the S&P 500 are built differently. The Dow is price-weighted. That's just a fancy way of saying that stocks with a high price per share, like UnitedHealth, have a gigantic impact on the average. Think about this. The Dow fell about 250 points, and UnitedHealth alone was responsible for 200 of those points. Just one stock. The S&P 500, on the other hand, is market cap weighted. That means the biggest companies, like Apple and Microsoft, are the ones that move the needle. And on this particular day, they had a very, very different story to tell. Which brings us to the other side of the coin. While the healthcare sector was in an absolute freefall, the tech sector was basically a superhero, holding up not just the S&P 500, but really the whole market's good mood. So why was tech so strong? Well, a few big reasons. First, that AI investment boom is still going full steam ahead, and that has everyone feeling optimistic. Second, chip stocks, the semiconductors, just kept on climbing. And maybe most important, investors were getting super excited for the big earnings reports coming from the giants. We're talking Apple, Microsoft, and Meta. All that good news combined was more than enough to cancel out the bad news coming from healthcare. In a weird way, a day like this is actually a sign of a pretty healthy market. It shows you that the market isn't just one single thing moving up or down. It's this collection of different sectors, each with its own story. And when one area has a major problem, another area can be strong enough to balance it out. It prevents one single point of failure from taking the whole system down.
Okay, so we've gone through the what and the why, but let's get to the most important part, right? What does all this drama actually mean for you and your money? Let's turn this into some clear takeaways.
Okay, 3 things to think about right now. First, take a look at your own portfolio. How much exposure do you have to healthcare, and specifically to health insurance stocks? Might be a good time to review that. Second, the Fed is meeting this week. That always has the potential to shake things up, so just be ready for some volatility. And third, with those huge tech earnings coming up, think about your risk. Are you maybe a little too concentrated in just a few of those big names? And hey, just as important is what not to do. Number 1, don't panic sell just because of one bad day for one sector. Number 2, as great as tech is doing, don't put all your eggs in that one basket. And number 3, probably the most important, tune out the noise. Don't make big decisions based on a tweet or some political headline. Stick to your strategy.
So, where are we headed from here? The market's actually given us a pretty clear roadmap of what to watch. Let's take a look at the big events that are going to set the tone for the rest of the week.
Man, this week is absolutely packed. We've got the Fed statement on interest rates. That's going to move everything. Then it's a parade of earnings from Tesla, Apple, Meta, and Microsoft, which will answer that huge question, can tech keep up this amazing run? And to top it off, we get the PCE inflation data, which is the inflation number the Fed cares about the most. It is going to be a busy, busy few days. And all of this leaves us with one final big question. We just witnessed a perfect clash of two massive forces. On one side, a government policy change that rocked an entire industry, and on the other, a wave of tech innovation that lifted everybody up. So the question for all of us is, which of these forces is going to win out? Which one will define the market's next big move? To find out, you're going to want to stay tuned. Make sure you follow our updates as all this unfolds. Stay informed and stay focused.